You know, I'm often asked, what happens when somebody passes away? How does the life insurance company pay the benefit out? Well, what typically happens is I'm one of the first people that's called if my clients experience a death in the family, and then I give some advice based on experience. And, you know, people get taken advantage of in funerals. We try to advise our clients what to look out for in the pitfalls in that industry. And if we can save them some funds doing that and a lot of heartache, it's better for them. But typically, the life insurance company needs a death certificate and a completed claim form by the beneficiary, which I take care of with the beneficiary to make sure it's all done properly. And sometimes it takes a couple of weeks to get a death certificate. But how do you get a funeral paid for if you have to wait 2 weeks to get a death certificate so the insurance company can pay? Well, there's a thing called an assignment, which all funeral directors are familiar with. And a person, if they don't use a credit card to pay for a funeral, or if they don't use their own savings to pay for a funeral, they can have the funeral director sign an assignment that they authorize the insurance company to pay the funeral director once they process the claim, so that nothing has to be withheld for that purpose. But by and large, people want to know, what do I do with the funds? I mean, let's take the case of an individual, a 35-year-old couple, where one of the two members dies unexpectedly, and there's a large amount of life insurance, $200,000, $300,000, $400,000, $500,000. The survivor isn't used to dealing with that amount of money. And unless they plan it properly, it'll blow away in the wind. I've seen it happen far too many times. You've heard the story about lottery winners, how they don't have any money after a few years. It's because they're not used to dealing with that amount of money. So we show clients how to take the insurance proceeds that their spouse provided for them. We show them how to put that money away to earn interest, how to manage their budget under a new circumstance of less income, and let that money, excess money, grow in an equity indexed annuity, which is totally available to the person putting the money in there. But more importantly, it grows and compounds at interest, so that down the road, the survivors use the money to draw on to supplement their income, and eventually there's a nice amount of money at the end of the period, 20 or 30 years, for them to supplement their Social Security income. A lot of things can be done just knowing what to do with it. We know what to do with it, and we advise our clients to their best interests. Every individual situation is different. Some are similar, but no two are the same. So we design everything individually to fit a person's needs, their family's needs, their plans for the future, and we try to let the insurance companies work to their benefit. I hope that helps some of you. If you have any questions, call me, Frank Strocchio, at 602-404-9440. Until we talk again, stay home, stay healthy, and stay hopeful.